Hey guys, welcome back to another episode of Forex Tech Magazine. It is your host, Lewis, here with you in the early AM hours. I want to welcome all of our new visitors and also all of our folks who've been with us since day one. Um, welcome, and also the folks that are going to be rewatching this broadcast later. Okay. Before we get too far into this, I want to go ahead and get the disclaimer out of the way. The disclaimer goes a little like this. Any information that you'll be receiving from us in the past, in the present, or in the future should not be considered any type of financial advice. Any information received from us should be considered strictly as entertainment and educational purposes only. And if you are seeking financial advice, our recommendation would be to seek the services of a licensed, competent advisor. All right, perfect. So now we got that out of the way. Let's go ahead and get what you came here for. Let's get into the trades. Boom. And I think we just kind of go top down. Yep, we're just gonna start at the top and just kind of work our way down. We'll look at where we were at yesterday, going all the way up and get caught up to where we're at today, as far as with the trades that are still active right now. So the first trade we're going to look at is the Great Britain Pound, U.S. dollar. This was a trade that we got in, was it yesterday or maybe a day or so ago? At any rate, let's look at the buy-in or the buy price, stop loss, and the take profit. Okay, so we're out of this trade right now, and thank goodness this trade right here was profitable. Right, this is our what went right, what went wrong portion of the episode. And with this particular pair here, excuse me, everything went right. Okay, and so essentially, this right here was our buy order. The blue line, the red line is our stop loss, and the green line can't really see it right here because it's kind of merged with the support resistance line. But that's where our take profit was at. Okay, so we got into this probably about a day or so ago. This is not one that we went into yesterday. We only brought into one pair yesterday. Um, and what happened was we have been trading the London daybreak strategy as it was um, given to us, or what the way that we have received it over the internet, over YouTube, looking at various instructors and gurus sit down and try to break it down for us. And it just really wasn't finding too much success with it. Success was kind of here and there. The main part of the problem with it was just getting stopped out too early in the trade. The trade would move in our direction, but because we wasn't actively monitoring the trade, typically saw whipsawing effect where some news or something might would come out during the day and take us out of the trade early. So the only real way to kind of combat that would be to either monitor the trade actively, or B, put some type of trailing stop or something like that in, and or stop loss, dynamic stop loss, and didn't really want to do that. So I just said, you know what? Let's just keep it simple. Let's just get back to the basics. And the basics is this: if the price is making higher highs and higher lows, it's trending up. If price is making lower highs and lower lows, it's trending down. So, look at where we're at in regards to support resistance on that day. I'll look where we're at as far as what price movement on the day. Is it making higher highs and higher lows, or making lower lows and lower highs? And just trade accordingly. This situation here, as you can see, price is definitely making lower highs and lower lows, right? Here goes a high here. Here goes a lower low, lower high, lower low, lower high, lower low. You're getting the point. Lower high, lower low, lower high, and ultimately lower low. So looking at this, not seeing any of this here, but just kind of like looking at how it's been trading in the past, looks like price was still on a downward trajectory, and we're getting close to support, but we hadn't necessarily hit it as of yet. So it looks like that's what price is moving towards. So went ahead and I set my order entry, put my stop loss back at the last swing high, and put my take profit right there at the support zone. And sure enough, it took us about a day or so to get there, but we got there. And off that trade right there, some nice money was made, and we'll get to how much money was made in just a minute. I just kind of want you to, once again, see the methodology, the thought process of what went into placing this trade and why we were confident in doing this trade. Now, with this particular trade here, and pretty much for all the trades that we've been doing, we just take a standard lot, right? So standard lot is going to be $10 per pip. We could take less, could take a mini lot or a micro lot, or we could take more, right? Double up or triple up or even quadruple up on the standard lot, right? So instead of making $10 per pip, it could be 20, 30, 40, 50, 60, even $100. It just really depends on what your appetite for risk is and how much equity you have in your account, how much you're willing to do on a trade. Hold on one second here. I just need to pause this for a minute. All right, so we're back here. Sorry about that, folks. So now what we got? So yeah, anyway, so it really just kind of depends on how much how much you're willing to risk, how much are trying to make, and what we'll do as we start getting to the live accounts, we'll start actually looking at leveraging options based off of how many, how much pips you're trying to capture, how much you're trying to risk to get the pips that you're trying to capture. But anyway, just want to just kind of show you this right for right now, right? And remember, it really all comes down to the basics. The more you understand about the basics, the better you're going to be at trading, just the better opportunities you're going to have for yourself. And the easier it is to navigate this stuff. When you don't understand the basics, this stuff is really tough to navigate, and it can be really confusing. Always remember that. All right, so the next one here is the Great Britain Pound, Australian Dollar. Once again, kind of the same methodology here. Looking where price is at in relations to support and resistance. We have support here. This is black line support. Our buy order entry is here in the blue. Our stop loss is back in the red, and then our take profit is in the green. Okay, so if you look right here, we notice that price looks like it was on a downward trajectory again. Here goes a high, here goes a low, here goes a lower high, here goes a lower low, a lower high, a lower low, a lower high, and so forth. You see that, right? It's not anything that's hidden from us on the chart, right? You don't have to put any type of special indicators on here. You don't have to put any type of moving average crossovers. You don't have to do any type of RSI. You don't have to do any MACD indicators. You don't have to do any type of Gartley patterns. You don't have to do any type of Fibonacci. You don't have to do any of that stuff just to see what we see in here, which is prices moving lower, right? Because here's a high, here's a low, here's a lower high, here's a lower low, here's a lower high than the previous high, here's a lower low than the previous low, here's a lower high than the previous high. So as you can see, price is making its way down, right? Based off of that analysis that price is making its way down, we place our entry order here, right? Put our stop loss back at the most significant high, right? They want to put it here, and they want to put it here, they want to place it over here, put it back at the most significant high, right? And then what happens is the order entry was triggered, and price moved on down, and eventually it hit our target, which was here, right? So once again, this was a trade that everything went right on. Can't complain about this at all. Everything went good. Only way we could have made this better, perhaps, would have, like you said before, put in some type of dynamic trailing stop or something. But even then, you run the risk of getting pushed out, whipsawed out early on the trade. I like the way this trade, we follow price completely down to our target. And when we did, it was rewarded, right? We didn't get greedy. And one thing you notice, right, when we hit our target, there's still some room for this thing to move, right? But we're not getting greedy. We're not going in and trying to hit the bottom. We're not trying to come in and get a top, We're not doing that. We're just trying to capture the move with the price. And this kind of goes back to what I was saying a while ago about getting on base. I think I told you this yesterday. Get on base, right? This is a base hit. The one that we just looked at with the Great Britain Pound US dollar, that was a base hit. That's what we want to do. We want to get on base, right? There are going to be times where you're going to get a home runs, but for right now, what you want to focus in on is getting on base. And getting on base is being correct about the direction of the move and being correct about being able to take some profit out of that move, okay? That's all you got to do, man. Just get on base. You hit those home runs when you double up or quadruple up or whatever it is that you're gonna do with your money, right? Um, you know, uh, when you can actively get in there and manage the account. A home run would be for me. Would be, we went in and got very aggressive with our how much money we were, willing to risk. Uh, as we, got into the profitability mark of the trade, we bring down a stop loss to ensure that there's no, that we're gonna have a risk-free trade, and then we just kind of let the trade play out. To me, those are home runs, right? We got really aggressive, made a ton of money, and it was a risk-free trade. Every trade doesn't have to be that way, right? But hopefully, once we start trading this live account, we'll start doing some of those risk-free trades, some of those home runs, setting them up for you, and then that way you get opportunity to see it. But at the same time, we also want to make sure that we do these trades here with the standard lots that are really good and high probability trades, right? Because why is that high probability? Because price is already moving down, momentum, money, everything else is already engaged in moving down, right? And all we're doing is trading in the direction the price is already going. High probability the price is going to still continue that direction. I don't know if you remember science class, but what they say, object in motion tends to stay in motion, right? Centripetal force. Those same laws of science applies to, forex, man. Money in motion tends to stay in motion, right? Until something happens that stops that motion and then redirects it going in the opposite direction. But that hasn't happened as of yet, not with this currency pair. Okay, so let's get out of this one. Let's look at the next one, which was the Great Britain Pound, Japanese Yen. This is actually one that we're still actively in right now at the moment. And let's kind of squeeze out a little bit. So this one right here, same thing. You can see price is doing what? You already know now, right? Here's a high, here's a low, here's a lower high, a lower low, lower high, a lower low, right? We actually got in here, right? Price moved back up again, started moving sideways, right? And what happens when price moves sideways? Well, when price moves sideways, it's typically consolidating, right? And it typically consolidates before one or two things happen. Either A, it does a reversal, complete reversal, and goes back in the opposite direction, or it does a continuation and continues to move in the direction that it was originally moving in, right? Now, the latter, the moving in the original direction that it was originally moving in before the consolidation, that typically happens about 70% of the time when you see a consolidation occurs. So that means I got a 70% probability of being right that this thing is going to move going back down, right? And so I put my stop loss accordingly. It's a pretty wide stop loss, right? I think it's almost 200 pips, which is ridiculous, right? But my take profit is almost about the same as well. So, well, maybe not so much. But anyway, I'm taking a larger risk than I am. Taking a larger risk than take profit. Now, I don't normally always do that, but once again, this situation here, when I got a 70% probability of being correct and for the direction of this movement, I'm looking at where price is already going. I feel pretty confident about this move, right? And so I was, of the mindset that this would be a good move to make. And also too, when I was looking at this originally, hindsight is 20/20. I didn't have the advantage of seeing all this, this strong move up here and all this, that was happening on this side. I just saw that price had moved downward, price had came back up, right, to a new lower high, right, and it looks like price was getting ready to make its way back down again. And so that's why I was, okay, you know what? It's fitting the pattern. Let's go ahead and sell. Didn't know that it was going to be moving out and consolidating over here over time. But one thing that I am happy about with this consolidation, price went back up, right? And it made this high here, which is still a lower high than the high that we initially placed at our stop loss at, right? It went down, didn't test this low, but came back down and then it went back up again to retest this high, right? And it did not break over this high, and then it went back down. It retested its low. It actually broke below that low, right? and so now came back up. It looks like it's tried to make another high here, which would be a lower high. All right, and so my assumption or my analysis would be that this right here should come back down, break back through this low here. It's going to retest that low, and it should break back through that low. And who knows? Maybe before the end of the day, we'll break back through this low here, and we'll retest that low, break back through it, and then hit our price target. So, but anyway, I feel good about this trade. To me, it was a good trade, and I'm happy that we're in it. And I think we should be profitable on that. This trade right here should work out to be about $700 and some dollars, like $740, which is pretty cool. Even if it took us like 2 or 3 days to make it, I think it's still pretty good. Most people make like $700 some dollars maybe over a 1 week or 2 week period. So for us to be able to do it within 2 or 3 days, I think it's pretty awesome. The next one we were looking at was the Great Britain pound, Canadian dollar. This right here, I like this pair. And the reason why I like this pair is because when we first came in, a couple things we were looking at was one, what was the overall trajectory of the price? And once again, price was moving down. We got a high, got a low, got a lower high, lower low. And then what we started to notice was that price was actually kind of consolidating, right? And you remember, I think it's maybe Sunday, early Monday morning, whatever, kind of drew this little triangle right here, right? And what we started noticing was that, price was kind of coiling up here, right? It was a high, it was a low, it was a lower high, it was a higher low, a lower high, a higher low. So price is kind of coming to a point, right? And then what we said was going to happen once it gets to a certain point, that it was going to spring out and go in either direction. But once again, when you start looking at triangles, wedges, and all this stuff, typically, consolidate any type of consolidation, there's about a 70% probability. And don't take my word, this is stuff that I just kind of found out over time, and there's also information on the internet to kind of go back and back it up too as well. So the percentage may not be 100% right, maybe less, maybe more, but this is kind of what I found doing my research over time. Is there's about 70% probability that price is going to continue in the original direction once it breaks out of the consolidation, right? So me knowing that, and me knowing that the original direction was going down, downward momentum, I just went ahead and placed the trade order to get in for a downward move, and sure enough, it did. Sure enough, it went down, came back up, retraced a little bit, and then just proceeded on down. This particular one here, we haven't hit our price target yet. We're getting close to it, right? See, it was here earlier today. It was close. I think it was like within 100 pips or so earlier today, and then it kind of backed away. Yeah, so under 100 pips earlier today, backed away. Now we're probably right at about 100 pips. Yeah, a little over 100 pips. So at any rate, with this particular one here, we expect this right here to probably close out either later today or first part of tomorrow. This right here is going to be probably about 1,400, probably about 1,400 pips altogether once we get it taken care of. That 1,400 plus that 700, that's going to put us over 2,000 pips. 2,000. Sorry, not pips, dollars. Puts over $2,000 for these two trades, which is good. And if you remember, I think when we spoke yesterday, I kind of told you that the account balance was down for the month just because I had been experimenting with trading these different strategies as far as with the London daybreak, what I had been gathering, just trying to really kind of put together a strategy that I thought was actually worthwhile and had some type of consistency as far as with capturing pips. And the other thing I was telling you too is that one good thing and one saving thing for my account has just been the ability to manage my losses in the account. A lot of people, they lose way too much for the account size that they have. We're talking about $2,000 or $3,000 per trade that they may lose. Whereas the biggest loss I think that we had incurred was probably right at about 7, maybe 8 at the most, and that was just like ridiculous. You know what I'm saying? But that's about the biggest that we ever lost in this account. And typically, losses were between $200 and $300. So Overall, the count I think was down like 45 or something like that, $100. But we were able to come back in yesterday, basically cut that in half. Um, and then once these two trades right here go through, we should be back profitable for the end of the month, which is pretty cool. And that's the other thing I was had already emphasized to you guys is that you know what, it doesn't really matter about the loss. I mean, it does matter about the losses because it's important to understand your losses, why you lost. It's important to always go back and analyze your losses, and to try to tweak it and try to correct anything you know that you see that you could do better. Um, but the most important thing is to not get too hung up on your losses, right? And the reason why people take really big losses is because initially when they first go into a trade, they may have went in and did the money management techniques and stuff, but once they get to the trade and they start seeing the position kind of move against where their analysis essentially was supposed to take them, what they'll do is they'll go in and either put in a mental stop or they don't put a stop in at all, which is the worst thing you could do. They don't put a stop in at all in this trade, but they do like a mental stop, or they'll go in and they'll adjust the stop and not adjust it to limit their losses, but they adjust it to actually potentially widen their losses. And just because they say, well, I want to give the currency a little opportunity to be able to run. I want to be able to get some ability to breathe, and which once again is just it's the wrong thing to do. You know, you should have an idea of what you're willing to lose and why. When you walk into the trade, and only adjustments, honestly, you should be doing on your stops should be to adjust it to limit your losses as you move towards your take profit. That's my own personal opinion. That's my own thought about it. Everybody's different, but our ability to limit our losses has really kept us in the game for this whole entire month. And now, like I said, we want to try to close the month out positive. So, we think we got a good enough handle on the strategy with our own little adjustments, own little tweaks to it, that, there's no reason why we shouldn't end up positive at the end of this month. Okay? At least by the end of this week. Let's look at the next one. So that was the Great Britain CAD. And the last one we got on the list here was the Great Britain Pound New Zealand Dollar, and which is another pretty good one here. The blue is our entry order, buy or sell, and the red is our stop loss, and then the green right here is our take profit. Once again, just looking at this, it's real simple, folks. It's nothing here that requires you to be a rocket science. There's nothing here that requires you to have any type of advanced degree. It's just simply looking at the chart and saying to yourself, is this thing moving up, down, or sideways, right? And we can look at it and we can tell it's not moving up. It doesn't really like it's moving sideways like it made it did for a little bit here, right? But for the most part, it's doing what? It's moving down, right? And so we can also confirm that by looking at the highs and the lows on the chart, right? So here goes a high, here goes a low. This high right here is lower than the previous high. Right, this low right here is lower than that previous low. It's another high that's lower than that previous high. A little low. Looks like we kind of moved sideways for a while. Here goes a high that's lower than that high, which is lower than that high, which is lower than that high. This low, which is lower than that low. Here goes this high, which is pretty much about the same height as the other one, right? Kind of retested it, right? And this right here is what? Our resistance area, is our support area. It bounced off the support, went up and hit resistance, came back down to support, right? Broke through support. It broke through support. That lets us know what? If it broke through support, then it's probably going to be a sell. We also understand that when it breaks through support, then its price is probably going to try to retest support. All right, so just kind of be on the lookout for that. You don't want to have your stop losses too close, because if you do, you're definitely going to get it triggered. All right, price broke through support. Came back up, we tested that support, right? That support then in turn became resistance for this particular pair, and after it became resistance, price then broke through. Broke on down, and it went on down and it hit our take profit, which is good for us, right? Because we like to make money. And once again, notice didn't try to capture a top, not trying to capture a bottom. We're just trying to capture pips along the way, right? And we were able to. All right, so once again, this is a very profitable trade for us. All right, let's look at some of the numbers here. We'll come back to this one. All right, so we'll look at the Great Brent Pound US dollar with that pair. Captured 79.6 pips for a total of $795.10, which is good. For the Great Brent Pound Australian dollar, we captured $121.2 pips for a total of $861.60. That's good. Let's go back. Let's see. All right, here we go. There we go. And then for the Great Brent Pound, I already did that one. Yeah. Oh, and then for the Great Brent Pound New Zealand dollar, we captured 150.1 pips for a total of what's $986.70, which is really good as well. So that that alone, I think it was like about $2,600 worth of pips or worth of dollars that we did. Go back and do the math on that one. I don't know if you guys can see my my calculator or not, but I'm about to do the calculator, just kind of add this up. 6.7 plus 79510 plus 7. Yeah, so that's $2,643.40. If you guys noticed, this account history yesterday, it was negative about $3,600 some odd dollars. That's why I was telling you, down probably about $4,500 altogether. So for us to go up that amount, they left us with about, I think it was like 1,040 or something like that, that we need to recoup between the two pairs that we have on now. We definitely should be able to recoup that, and like I said, bring the account back positive levels sometime between today and tomorrow. You're looking here and you're saying, well, what are you talking about, Wilson? All I'm seeing now is down $336.66. And the reason being is because this account scene that you're seeing here, the screen, it essentially shows the counts, profits and losses for over, I think, like the last trading week or so. So it's kind of like a rolling balance for over the last week or so. So it doesn't really show you what's been in the overall history of the account. To do that, you go down and you print out a PDF or print out or go into your account, main history to see that. Okay. Don't have any pending orders. Right now, the position that we're in, you'll see the two positions that we have on deck is the Great Britain Pound Canadian dollar, still trading the hell out of that one. Right now, that one is worth $627, $29 or whatever. The Great Britain Pound Japanese Yen, right now, that right there is still at a negative, is at 421.23, which is okay. I mean, they balance each other out, so it still gives a positive $187, $190, just because the CAD is doing better than the Japanese Yen trade. But like I said, looking at the trade, it's moving in the direction that we need to move into. It's just not moving as quickly as we like. So I figure we give another day or so, we should be back in the positive territory on that one as well. And like I said, once again, bringing our overall account balance back up to where it needs to be at. Like I said, man, this is the real part of trading. I like sharing with you guys the wins, the losses, the challenges, and everything. But like I said before, you take a loss, it's no big deal. As you can see, we took losses for a couple of days straight, right? I even had some people make comments and were kind of like laughing, like, you taking losses. But what they didn't understand, and what I tried to explain to them is that taking losses is a part of it's a part of being a trader, right? But you have to have the understanding and the mindset that if you got the skills, right, you can take a loss, but you can still come back from it. And as you've already witnessed and you've seen from the trades that we made, just from yesterday, we were able to go back in and pretty much essentially wipe out all the losses that we had for the month with just the trades that we put on, over the last 2 days, right? It's not hard. It's really not hard, folks. It's not hard at all if you understand the basics. So with that being said, if you haven't already went to our website and download the free online training that we have, and to help you learn the basics, please do it. Go to forextechmagazine.com. Go there, download the free online training that we have. It's great information. It's going to give you all the information that I've been using so far. And the good thing is, like I said before, you don't see any, fancy schmancy, indicators up here on my screen. It's not cluttered or anything like that. It's just the basics. I'm just looking at price action. What is price doing? Is price moving up, down, sideways? And based off of that, I'm going in and I'm putting in position on my trades, and we've been quite profitable with the positions that we've been able to put on the trades. It's easy, folks. It really is. Okay. The other thing is, if you haven't already went online and registered for the software, this is the Smart Trader software. You got to do it. It's for your best benefit if you're going to be trading to, register with this software. I mean, there's a lot of different software platforms out there that you can register with, but I'm gonna tell you, the Smart Trader is heads and shoulders above the rest, and it's just for no more the simplicity of the software, and then the smart tools that they give you, such as the Smart Fibonacci, Smart Trend Line, Smart Support Resistance. I love this stuff. I love that you're able to go in here and actually look at your candlesticks and understand, if you have a bearish engulfing candle, right? How important is that? You don't have to sit here and actually try to figure this out yourself. And one key thing, especially when you're looking at this charting software, right? If we know that we want to sell into a resistance, right? We want to buy into support. If I go in and I just put up, and what I did, I just put up, bearish engulfing. So that means fine. This is a bearish candlestick formation, right? And if you're going to be trading, you got to understand these candlestick formations, right? It's very important to your education and your growth as a trader, right? I just one click and automatically this thing pinpointed every bearish engulfing candlestick out here, right? So once again, if I'm trading and I know this is resistance and I'm looking at this, man, and I see that there's a bearish engulfing candle right here, that automatically gives me more confidence and more confirmation to go ahead and sell at this point, right? I can sell now, right? And if I would have sold, guess what? You'd have made money, right? Going into support. And once again, we break through support, I'm wondering to myself, man, should I be buying this thing or should I be selling this thing? Of course, we want to be looking for selling, but this right here gave me even more confirmation to sell because, wow, I got this bearish engulfing candlestick here, right? Boom, one place to sell on, right? It retests, the support for a little bit, but guess what? This thing just crashes on down, man, which is really great, really awesome. And as a trader, the more things that you can get, more tools you can get in your toolbox that's going to help you make better trades, is just, you want it. Why wouldn't you? Take every advantage that you can get, and this software has a ton of advantages here. If you're someone who maybe coming from another platform and you're studying Gartley's or harmonic patterns or Elliott waves or things of that nature, well, they have in here smart patterns, right? That essentially what you're going to do, same thing, kind of same concept as far as with the candlestick pattern recognition or charting recognition. You come in, you click on a smart pattern, and automatically, boom, 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 bow, it's going to go in and it's going to show you where these patterns are at on the chart, right? It is awesome. Now, for that particular system, you're going to have to upgrade. Right now, we upgraded from the basic demo up to the next one up. I think it's only $20 some a month. It's nothing. One trade is paid for. It's nothing. Once we go ahead and get into the, start the live account, we're going to go ahead and we're going to upgrade to the elite, which is about, I think it's $59.99, something like that a month. Once again, it's nothing. That's one trade. If you're trading actively and you can't make $60 in profit, then you don't need to be trading actively. Just period. Your trade should be paying for your technology. Your trade should be paying for, any type of tutoring or any type of coaching or whatever else that you're getting. If you're not making enough trade-wise to be able to pay for your technology. You're not making enough to pay for any type of coaching or tutoring or classes that you're learning online. Then you need to find you another coach, another class, or something else, because you're not gaining. You're not prosperous, and you know what? That's not good. Okay. So at any rate, in full disclosure here, we are an affiliate of this software company. So if you go in and you actually do anything other than the demo, let's say you upgrade, you say, hey, I do want to go ahead and I want to make a purchase. I want to take one of the paid uh, upgrades. Then if you use our links, then of course we're going to get compensated for it. Now it's not a ton of money that we get compensated for, but it helps us to be able to keep this channel active. It helps us to be able to pay a couple of bills here and there to provide this free content for you. So that way, hopefully, you guys are becoming better traders in time, right? So at any rate, we knocked this one out, got this out of the way. Let's start looking at what we're going to potentially be trading today, if anything. So first thing I want to do is I want to clear off my screens. And I know some of you don't like going and clearing off your screen. Some of you like keeping the screen as is. And if you do, that's fine. I just personally like, after especially if I'm already out of a trade. I mean, if I'm in a trade, I want to keep my screen the way it is, because I want to constantly be monitoring, make sure I was, looking at the right stuff when I got into that trade. But if I'm already out of the trade, already, prosperous, I'm just like, clear the stuff off. I try as much as possible to keep my screens as simple as possible. I think far too many people, you look at the screen and you got too much stuff going on. And when you got too much stuff going on, you're just confusing yourself, I think. I think you're confusing the process and don't necessarily like that. I'll minimize this screen here, open this up a little bit. And so once again, when I go into a trade, I just like to keep it simple, man. I like to look at this and I like to say, okay, those of you who've been with me for at least a day already know exactly what I'm about to say here. And what I'm about to say is this: you got to find your support and resistance on the screen. Why is finding support and resistance important? Well, once again, when you go to the mall, you go to a building, a facility somewhere, the first thing you're going to notice that when you enter in, you're going to see a placard on the wall or on a kiosk someplace, and it's going to tell you, it's going to say, you are here. And then it's going to show you all the other different departments or stores that's in that facility, right? The reason why they do that is so that way you're not lost walking around wondering, trying to find, whatever it is that you're looking for, right? Same thing with putting support and resistance lines on a chart, right? The purpose of it is so that way it helps you, so that way you're not going to be lost, looking for, where you at in regards to this trade, right? And so one of the things that I find best is I like to look all the way to the left as much as possible. I don't necessarily want to look at where price is at now when I'm putting this in, and the reason being is because sometimes you can get trade bias, right? And you heard me talk about this before. Trade bias is when you go in and you just you got this notion, well, I know exactly what I'm doing, I know exactly where this thing is at, and you're just so hell bent on making it work. And the reality is that you're not even close to where, or not even close and knowledgeable about what price is actually doing. You're just, you're doing this based off of emotion, right? Worst thing you can do for your trading, worst thing you can do for your dollars, man. Worst thing you can do for your dollars. So we'll put a couple of these in, right? Boom, boom, bow. Let's roll back over and see what we got. All right, boom, boom, bow. All right, let's see here. And you can see where price has respected these support and resistance lines over time. So this is the original one we placed in here. You see where price came down, hit that support, went back up. This is another support line that we hit here. You see where price came down, hit that support, went back up. This is a resistance line, same thing. Price went up and hit it, came back down. So you kind of get what I'm saying here as far as how price respects these support and resistance lines that have been placed in over time, right? So now with that being said, we see here that price is doing what? Price is traveling from previous would have been support slash resistance, and it's going down to this support line here, and then we can kind of expect then once price hits the support that it should bounce back up, right? Go back towards this resistance here, right? It may keep down below it, but you know, we think that it may just kind of have to bounce back up. So with that being said, how much room is it between where we're at now and where we're looking to go? That is about 60 pips. And 60 pips. I'm not really excited about 60 pips. And $10 a pip, that's about, I'm sorry, 58 pips. At $10 a pip, that's about what, $580. I have to put my stop loss back, probably somewhere up here, which is going to be way more than what I'm risking, way more than what I'm looking to get. So for this one right here, I probably want to sit out and just kind of, you know, leave it alone, right? So for the Great Britain pound US dollar, not looking to trade this one today at all, right? If you're already in it, you know, hopefully you already got your, you know, your take profit, right? And, you know, hopefully you're going to make some money off that one. But for me personally, it's not worth me getting into it right now. I think I'll just sit that one out and just kind of, you know, look for something else that I can put my money in that, you know, it's going to pay a little bit better. Right? So, okay, so here we are, Great Britain pound, Australian dollar. Same thing, let's kind of go in here. Let's look at this, right? Let's get our support resistance lines going. It's real simple. Here goes a lower low right there, right? And when we look at these support resistance lines, all we're looking for is we're looking at lower lows, lower highs, higher lows. You know, just these lows and highs, these U-turns in the market, right? They kind of come in and say, okay, well, you know what? If price U-turn here before, then there's a good possibility that it may U-turn at this level again. So let's just make a note of it, so that way if it does, you know, hey, you got a good reference point, right? Because we want to know what support is, we want to know where resistance is, right? We want to know where that stuff is at. That's going to help us do what? Become better traders. Absolutely. Good. All right, so let's get over, see where we at. Bam. All right, I love this one, right? Because here was a previous resistance area, right? That has turned into support, right? Price moved up, bounced up, moved up. And now it was going to be support, but price did what? It moved down. And guess what, folks? Look at what I got here, right? So, see this candlestick? I never went back in and turned this off, right? My smart charting software. So we got a huge bearish engulfing candlestick here, right? That crashed through that previous support. And then looky, what else we got? We have this candlestick here, which is today's candlestick. Looks like it's trying to retest that level of support, right? And what happens before in the past when it retests support? Well, you know, it's prone to, you know, retesting it, but then, you know, following through with the original movement, right? Not saying it's gonna always be the case. I mean, it could go through, and like this one right here, right, could go through and then boom, bounce back up through it. I don't know. But when I'm looking at this overall, right, it's a lot of money coming in. It's pushing this pair downward, right? And how much potential money could be gained off of shorting this pair, man? Whoa, 446 pips. That's a lot. That's good money right there. That's good coins right there. 446 pips potentially if we short this pair. I'm gonna say this is a pair that I'm interested in, right? And so what I'm gonna do, I'm just gonna make a note. And if you don't have your notebook, if you don't have a handy dandy notebook someplace where you can write down this information, then you need to get one. All right. Don't be crazy. Don't be a, what do we call it? I say douche, but don't be My pen is not working. Crap, but that's okay though. So we know what we got, right? My pen's not working, but I'm okay. Um, we definitely want to look at this one right here, and this will be one that we're gonna take a closer analysis at, closer look at, and see if it makes sense for us to go ahead and short this pair, right? I think it may. We are already into this pair here: Great Brent Pound, Japanese Yen. Not too concerned about this. I'm gonna let this run continue to play out. Now, if something were to change in this pair, right, and we start seeing it's making higher highs and higher lows, then we may want to early out before we hit that stop loss. But because it kind of like it tapered out here, right, it went back in, it made this high, and it kind of retested this high, and then it broke low, and now it's trying to make another high, which I think is going to be a lower high. Not too concerned about this one. I think we should be okay on this one. Okay, so we're gonna leave this one in as is. All right, Great Brent Pound, Australian dollars, one that we're gonna be looking at. We're currently in this trade right here as well. This is our Great Brent Pound, Canadian dollar. Once again, we're gonna let this trade do what it do, right? And you've heard me say this before. Typically with the market, you get these big market moves down. The market gets exhausted and it has to breathe, so it pulls back before it makes the next move down. And if you ever think about it like this right here, right? Just take a really deep breath, right? And then just blow out as hard as you can. Like just blow as hard and as long as you can, just keep blowing, 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 blowing. At some point, while you're blowing, you're gonna have to inhale, right? Because if you're exhaling everything you have in your lungs, your whole lung capacity, at some point you're gonna have to inhale. And when you take that breath back in, it's gonna feel great, right? For one, but then two, now you're ready to exhale again. The market has the same process, right? So when you start seeing these sell-offs, right, this is the market exhaling, right? It's blowing out everything it has, right? Its lung capacity, right? And then when you see right here, where it starts to retract back up, essentially what it is, the market's taking its breath. It's getting its breath. It's like, whew, man, I blew out a lot. All right, I'm ready. Let me do it again. Like, and it blows out some more, and the market goes back down again, right? So kind of thinking in those terms. Once again, just keep, if you can kind of relate all this stuff to really something simple, right, the better you're going to be. Don't overcomplicate it, right? Because this stuff is not that complicated, trust me. Once again, if I can do it, you can do it. This says, why not get rid of the yen? I'm sorry, I didn't even see this, buddy. You said grind more sleep less. Says, why not get rid of the yen? The reason why we don't get rid of the yen is because the yen is actually going in the direction that we want it to go, right? Sometimes it just takes a little bit of time for a trade to develop, and so that's where your patience kind of come in. If I think somebody who would make a really good trader is maybe a fisherman, somebody who does fishing for a living. A lot of times people kind of get into trading are people that are gamblers and who are adrenaline junkies, and so they kind of come in and they just like to they like the excitement. They like to see the numbers flash. They like to see the account balance go up. They get a rush when they see the account balance go down. You know what I'm saying? So it's just like it's just a real rush, kind of like a high for them. And unfortunately for those folks, they come in, either they do really good or they do really bad. And if they do really bad, they do really, really bad. But I think the person that has the better chance, in my opinion, is somebody who just has patience and who has an understanding that the market has to kind of come to you. And as the market comes to you, that's where the profits come as well. Because you got to remember, man, you're talking about over a $5 trillion market. So there's a lot of money going in and out of this thing on a regular basis, right? And so when that money's coming in and out, it's a lot of opportunity for you to make money, a lot of opportunity for you to lose money, depending on what side of the trade you're on. And so you really want to make sure you're on the right side of the trade. You don't want to get in too early. You don't want to be in too late, right? You want to kind of get in just right. And when you get in just right, you want to kind of ride it. You don't have to ride all the way to the bottom. You don't have to ride all the way to the top, but just ride it, make your money, then get out, right? But that takes a lot of patience. And unfortunately, a lot of folks don't have a lot of patience, right? It's something that's kind of learned. That's why part of what we do Forex Tech Magazine, is that we also offer a mentoring class where we kind of come in and really kind of help you work through your trades and stuff, help you make sure that what you're seeing, that you're just not seeing it by yourself, right? And kind of help you put that mental part together, because 90% of the people out there, they have the technical know-how and stuff. I saw a report, it wasn't too long ago. I forgot the company that did it, but you know how you'll see folks come out there and they'll say like, what is it? They'll say something like 95% of the people that trade lose money to the 5% who are the elite traders, or whatever that little scenario is. Well, the reality is, actually 90% of the people who trade are actually, you know, they're profitable, right? But here's the caveat, right? So they're right about the trades, right? They're right about the direction of the trades. The problem is they take the profit too soon, right? So they might have a trade like this one right here, and instead of letting it, play out or whatever, they'll take the profit, maybe here, right? Get maybe 20 or 30 pips, or 6 or 7 pips, or 10 pips, or whatever it is, some little small amount of pips, right? Then when they go to put on the next trade, they'll take a 30 or 40 pip loss, right? And then they'll take on another trade, and then they'll have like 7 or 8 or 10 pips win, right? And then the trade after that, they'll take another 30 or 40 pip loss, and then pretty soon they're out of, they're out of money, and then they're out of the game, right? But the reality is they'll have more wins than they have losses. It's just that the losses are so big that it overtakes any wins that they got, and then it forces them out over time, right? So our value to you, if you ever so choose to use us, is to kind of help you combat that. Having an accountability partner, someone that's there to make sure that you stay disciplined in trade. First of all, we need to examine what your trading strategy is and what your methodology is, and make sure it's something that could be profitable. And then just kind of, be an accountability partner and making sure that you're doing what you're supposed to be doing, staying disciplined, and that you're not going out and just, being an adrenaline junkie, or you're trying to revenge trade, and that you're using good risk, good money management skills when you go in there and place your trades, right? Those things are extremely important, always underlooked. Most people, when they're talking to people about trading, they're telling them about the latest, greatest strategy, telling them about how to buy signals. They're talking to you about a whole bunch of crazy stuff, man, that really is not, in my personal opinion, doesn't really make you a better trader. I mean, yeah, it gives you more knowledge, more tools to use, but if you're not confident in using the tools that you already have, and if you're not confident with just basic self-discipline, you can have all the tools in the world and it's still not going to do you any good. You're just going to go out there and, you know, and risk too much and trade too much and overtrade your account. Anyway, so the CAD, we're good on that. We're going to stick with this one for now. Let this one continue to play out. Great Britain Pound, New Zealand Dollar. This one right here looks pretty interesting. Let's check this out on a higher time frame here. Okay, so that continuation, price is still going down. Let's put some stuff on here and see what we got. Oops, you know what? I should have put this one here. This one. Alright, boom. So this is pretty good, and this way it could go either way. Alright. Because one thing I noticed here too, there's a dip right here. I just want to see something. One thing you don't want to do is you don't want to get caught up with too many support resistance lines on there, because then all of a sudden you just got a grid and it doesn't really look like anything, right? But you do want to do enough, and you do want to show it at relevant points in the market turns. I'll take that one out. Because it's going to give you an idea, once again, where you're at and what's potentially there. One thing I like about this one right here, you see that we went through support, right, on this trade, and then now you see price is coming back up to retest that support. What I would be anticipating is kind of like the same thing with the Australian US dollar. I mean the Great Britain pound Australian dollar. Is that price is going to retest this, probably move sideways for a little bit before it just goes below. Once again, because price is what just moving lower, man. Right? And if that's the case, then I would have to look at saying that my take profit would be, and I'll probably say here. And it could be here. Could retest all the way down. And remember, I'm not trying to necessarily look for a bottom or look for a top. I'm just looking for profits, man, for money. But yeah, it's about 360 pips. That's not bad. So, we're looking at two potential trades here. One's going to issue, one's going to probably be about 400 pips. The other one's about 300 pips. Um, that's not bad, right? Um, you know, I think that these are two potentially really good trades. So that's what I'm going to be looking at doing today. Potentially doing some setups for the Great Britain pound, the Zealand dollar, and the Great Britain pound, Australian dollar, and see if we can get some entries on these. And looking to sell, looking to continue what we're already doing with the. Looking to continue what we're already doing with the. Uh, with the other pairs that we already have in place. Sorry, I just drew a blank. Which would be the Japanese yen and the Canadian dollar. Right? We get some good pullback today. That's cool. We got a stop loss, way back up here out of the way. Right? We'll see how it plays out. This could be a bottom. I could be wrong. I don't know. I don't think so. But we'll see how it plays out, man. At any rate, I hope you guys have enjoyed this episode. Hope you've learned something from here. I hope you've been able to take something away. And hopefully you're going to be a little bit more of a successful trader by watching this. As always, I like to leave with something positive. And so the positive thing I'll leave you today is, once again, it's Les Brown. Right? I love Les Brown. And Les Brown, he had a quote saying that says that always shoot for the moon, and at least that way, if you miss, you'll be amongst the stars. I totally believe that. And essentially, for me, that just equates to do your best, work extremely hard. And when it comes down to forex, study as much as you can, go out and get as much information as you can, do as much as you can, because that way, what's going to happen is even if you don't reach the potential that you or the goal that you want to get to, right? You're going to be way better than if you just would have had low expectations and low goals for yourself and no goals for yourself. And, you probably want to reach anything close to where you're at right now. And that's with everything in life. If you're going to go out there and you're gonna go out there, you're gonna be a truck driver, whatever. Try to be the best truck driver you can be, right? If you're gonna sweep floors, be the best floor sweeper you're gonna be. You can be the best of whatever it is you can be. Shoot for the moon for whatever it is you're gonna be, and that way, even if you don't hit your goals, you're gonna be so far away from what you originally started. You're gonna be in such a better position than what you originally started. I want to say, take care of yourself, take care of each other. God bless you. I hope you have a wonderful trading day. I hope you make a ton of money. All right. I hope you make a gazillion dollars out there this trading day. And I will get back with you tomorrow to look at how these trades continue to play out. Anyway, take care. God bless.